I don't know if you get this. Right about now is when my brain kind of needs a break from news. It starts shutting down a little bit. It's like 100 degrees out. Like, how much can I care about SpaceX and Trump's crypto stuff right now and the market right now? I don't know if you get that sense because you're in the game.
Yeah,
but
you're describing...
once we get to that July, August feeling, I get a little bit of that like, all right, can we slow down for a sec?
You're describing how I have felt for the last year and a half, though. Like, being in DC where people are like ultra political in certain circles and like it makes its way into school drop off. Like, I'm already being told like I'm a bad citizen because I just have checked out. And I'm like, guys, like none of you are going to do anything about it.
My favorite political correction. It was a woman on TikTok was doing some ad for like seeds that she was planting in her garden. And the top comment was, are any of these native plants or are you just stealing soil from them? And the guy was serious. And I closed my phone and I'm like, that's enough internet for today.
Yeah.
We're yelling about soil to some influencer in Brooklyn. We can all just chill out for a sec.
And so I think though, in all seriousness, that's the pendulum swing that you get when you have somebody in power for the last 10 years, basically. Because even when Joe Biden was president, Trump was still like,
sure,
or at least his people were still in power and making noise. And so when you have the pendulum swing so hard in one direction, you have to be prepared for the other side when it swings back the other way, where you have people who are super, super liberal, super, super socialist who argue about things like where seeds were sourced from and whether they were stolen ethically from the country that they originated. Like, give me a break.
Can you give me an example of what you're getting yelled at school drop-off? It's okay if the answer is no.
Well,
but I just
literally, so we had the mayoral race here in DC. I was excited. DC, just for the first time ever, had ranked choice voting, which I think makes a ton of sense in a place that likes to consider itself an advanced democracy, right? So here in the US, we have basically two political systems. You only have one, the least dirty sock in the hamper is who you have to choose when it's time to vote for a president. I, as a registered independent, would like to see a third party candidate so that it forces each party to promote the best option they have, not the one who can get elected. And DC, for the first time, decided to go ranked choice, which gives you a taste of that. And so as people are in the morning of drop-off, talking outside of my kid's school about who they plan to vote for and who's the terrible candidate and who's the obvious choice and whatever, I was like, honestly, like it's April, the election's in June. I haven't really spent a ton of time looking at who these people you all are arguing about are, because you got like 9 people in a 3-person race, and all of them are Democrats in a place that overwhelmingly skews Democrat. So like, does it really matter that much? And they all like looked at me like I just, tried to take away their Second Amendment rights or something. Like the whole, and then again, we're at a kid's birthday party and I'm having the same conversation crops up. And I said the same thing, like, it's April. Do we really care, considering you're overwhelmingly going to end up with a Democrat who's going to vote the exact same way as the person who they got the job ahead of and whatever. Like, what?
So you're just cynical.
I'm realistic. Like, at the end of, and then we don't even have Senate representation. And so it's not like we're sending senators to Congress that are going to do anything meaningful on the bigger stage. And so like we're arguing about whether DC gets one more bike lane by the end of the year or not, basically, is the difference between who's going to be our mayor. So, that's the thing I get beat up for, not caring enough as a citizen. Like, you should be more engaged in the system. You should be more, and I've been checked out for a while. Like, it just, at the end of the day, like, do these little incremental things that we argue about meaningfully change anything for all of the people who really have problems in this country?
Colorado is about to be heated. And I don't know. I don't know if I'm as cynical as you are. The things we get upset about can drive change. Sometimes, I think often it is just noise. But I would just like to say for our listeners in Colorado, it will get heated around ballot issues coming up in November. I'll give you some of them, Malcolm. It will be penalties for fentanyl sale and possession initiative.
Okay.
It will be a sex requirement for school and college sports initiative. And then we may we might be voting on psychedelic mushrooms again. And I also believe there is one on the reintroduction of gray wolves, because in Colorado, we like giving people the choice in various animal-related issues, including but not limited to, do you want to have a slaughterhouse in the city of Denver, of which there's only one? Should we ban the sale of fur? Should we introduce wolves into the ecosystem? And should people be allowed to hunt mountain lions? And you look at some of those and you go, do we have a biologist? Because this is like, it was one of those things where I'm like, I like to, power to the people. I like to show up to the ballot box and vote. But I'm like, why are you asking me if I should be allowed to hunt mountain lions? That's for someone else to decide.
Yeah.
So
yeah, like why? Yeah. Yeah. Why are you allowing me to have an opinion on something I am so unqualified to decide on? That is a very good question.
Because it's America. Okay.
Yeah, well, wait. Speaking of, though, so I just spent this weekend at the Jersey Shore, and there are some places I had never been to the Jersey Shore before. It's a very interesting place to me because you have some very, very large estates up against the waterfront. And then you have these very what's the word I'm looking for? Not estates, I guess is the nicest way to say it. Like they're very unassuming, very small. Like these people have lived in this house for decades kind of homes, right up against these I can't even call them mansions. Like they're literally estates. They're so elaborate and expansive. And one of the things that was funny to me is I noticed that there's a flag off happening. I don't know if it's related to just it's July 4th weekend, this is what we do, or if it's the 250 and we're just super, super patriotic this time. But I saw outside of the state of Texas, I saw some of the largest American flags I have ever seen in my entire life, traveling all over this country where people are as patriotic as it gets in some pockets and less so in other places. Texas has the biggest flags I've ever seen. Outside of that, the Jersey Shore, ironically, like people's front yards, front lawns, had 100-foot flagpoles with the biggest flags I've ever seen. And I was like, is this a flag off? Because as you go through the neighborhoods, like they progressively get larger and larger, or more and more of them. Like it's like they're trying to figure out where else on this property can we put a flag to outdo the person next door to us. And I found that super America, to your point. And I was actually impressed with the level of patriotism.
I'm into that. Okay. Now I can say what the actual show is. There's a big credit binge. We've had the first half of the year. This is a story that I think will come into play in the second half of the year. I actually do have an America 250th topic that involves a little bit of history and maybe even a little more politics on the show that could be a lot of fun. And then also we got to get into this article that was in the Cut. And the title is, "It's Hard to See My Parents Living So Lavishly While We're Struggling." All right, let's get into it. Tomorrow, when this episode airs, SpaceX will join the NASDAQ 100. Anything you need to get off your chest about the first half of the year or that before we get to our other stories? Because I know SpaceX triggers you, and tomorrow's a big day for them. So it's just, I need to give you your opportunity to shine.
I should take the opportunity to clarify. I'm glad you classified it that way. SpaceX is not triggering for me alone in a vacuum. It's the place that we have allowed ourselves to come to. And this is what you're leading up to. We'll talk about in more detail in a second. But it's what SpaceX represents in terms of where the market has gotten to. And the best way that I've been able to categorize it is just crazy town. Like things that make absolutely no sense. We all know that they make absolutely no sense, but we're still going to look at it and participate and, jazz hands over here like nothing to look at. And that's really the thing that drives me crazy about the SpaceX IPO in the way in which it has been done. Separately from that, to answer the question you initially asked, I am thinking I was on CNBC last week, and this occurred to me in the moment as I was talking, which is never a safe place to be on live
to flesh out an idea.
But my opinion, my prediction for the back half of 2026 is that we are going to see Sam Altman personally have to walk back a meaningful amount of the spending commitments that they have so publicly made in the last year and a half. And that is going to have a meaningful impact on the AI trade and the narrative around the AI trade going forward from there. And the reason I say that is, one, because we know it's just mathematically impossible for them to grow their top line revenues in the way that they have projected. But then also Anthropic has overtaken OpenAI in terms of customer and revenue since February. And this is starting to, it was dripping before. It was a little bit of smoke there, and we had people who were leaking information. Now it's being like thrown out there onto the street. And I think what we're seeing is people who have been trying to quietly convince Sam Altman that the company is not ready to go public. We got to take a step back and like get ourselves together. I think now you have the bankers at like a Morgan Stanley, a Goldman Sachs, maybe a JP Morgan, who are also in control of this thing, who are saying to them, you are going to have to make these 6, 7, 8 big changes to your financials before we can write up an S1 that is ready for public consumption, that's going to get anywhere close to passing the smell test. And that's going to require some of these big pronouncements that you've made to start to come back toward something resembling reality. And I think all of that is going to happen on the heels of Anthropic actually making it out into the public markets and showing that it is in a much stronger position than OpenAI.
I mean, I'll say it right now. I'm committed to spending $10 billion on AI within the next year. We're finding funding sources right now, but we know it's a part of the show's growth. And we're committed to spending $10 billion
for now.
To it.
And until we see a reason to change that. And when we change it, we'll change it.
And the other part of this that I think is materially important is that the bankers are telling him to slow down. It is in the every interest of the bankers to do as many and as big of IPOs as possible, because that is the big payday for them. And if even they are saying, hey, you need to chill out on this for a sec, that's pretty significant. What else is going into this? This is a story shared with me from Bloomberg. It's about, or Wall Street Journal, excuse me. The credit binge, U.S. margin debt, or what investors borrow from their brokerages to buy securities, rose 54% to a record $1.4 trillion in May, over 50% from a year earlier, according to FINRA data. And now there's some concerns about that because there were a bunch of margin bets taking place in the South Korean stock market, where there's a lot of these chip makers. And that fell about 10% from these leveraged bets unwinding. So what happens when there's a bigger scare in the US stock market and you have all of these leveraged bets happening within options trading, just margin accounts, and then also these, the way you can really wrap it if you want to have fun is that you have a leveraged ETF that 3x's the direction of Tesla or SpaceX in a single day. Then I can take out margin, and maybe I can even play with options on that security as well. So you can get to 3 or 4 layers deep of just amplifying gambling returns and losses on some of this stuff.
Yeah, so that's what I'm referring to. That's part of what I'm referring to as crazy town mentality. Like, you have to look at this on its face, and the fact that triple levered ETFs tied to an index or double levered ETFs tied to a single stock are the mechanisms that are actually moving the underlying stocks now, rather than people buying the individual stocks. We were worried about single day options coming into this year, and that was the thing too that was kind of driving individual stocks significant up or down in one day's time. And now investors, it's not even just retail investors either. Like, a lot of times people will say like, oh, that's the Robinhood crowd, they'll wear themselves out. But you actually have legitimate hedge funds, like with real assets, buying these triple levered ETFs as a way to get juice on the movement, the momentum of the markets in any 1 day, 2 day kind of swing trade. And what that means is the underlying ETF manager has to go out and buy a sufficient number of shares related to that particular ETF. And that is what is causing these massive. So you have like a 10% move in the SOXL, SOXL. That is a 3x bull ETF on the PHLX semiconductor index, right? And so instead of buying all of the individual stocks that make up that index, I'd rather just buy the ETF. And the ETF's got to buy 3 times the amount of options now on that stock. And then the underlying company the underlying bank that decided to make me a market in that trade has to go and buy now the underlying stock to make good on that trade. And then the next day, if we decide, you know what, we don't think it's going to go up, we think it's going to go down. Well, now they got to unwind that and do the exact opposite transaction in 1 day's time. So it's making these gigantic gyrations in one individual stock without any individual investor actually having a buying decision related to, I think Micron is a great company. It's undervalued at 7 or 8 times next year's earnings. And I think that I should buy Micron now so that once it meets the market at 25 to 30, that's where the massive growth is for me as a shareholder. It's none of that kind of mentality. It's literally just, I'm going to buy this thing. I'm going to hold it for 24 hours. I'm going to flip it tomorrow and I'm going to make 10% on that money tomorrow. In 1 day, I'm going to make 10% on that trade. And that's what's driving the market one direction or another right now.
So it's not individual buyers when you see something like Micron swinging up or down 7 to 10% in a single day. It's these triple levered options that are meaningfully affecting the buying and selling activity.
Right. But to the uninitiated, it looks like Micron is a company that I need to be owning because it's moving 10% in 1 day. Why wouldn't? And so you jump in and go buy that in your Robinhood account. And so that's, again, the part that I'm most concerned about. It's who gets left holding the dust.
Not even the bag.
No, once the fire rips through and burns all this down, who's left just holding a bag full of ashes? Like, that's what I'm concerned about.
When I was an intern, I remember asking an investment person where I was like, I'm 20 years old. Why wouldn't I just buy the 2x QQQ and hold on to it for years, knowing that, like, okay, why can't I just basically 2x my return in the NASDAQ when I'm 20 years old? Won't that be better years from now? And he looked at, and I wonder how much of this misunderstanding is going on with retail traders, because it's simple, but it doesn't always hit your brain.
That sounds like a logical question, though, by the way.
Thank you. And he goes, it's because if the index goes down 50%, you have to double your money for it to come back. And I think that type of math in terms of losing and making money can often be forgotten in these types of markets.
Not only that, if it goes down 50% and then stays down, that fund family will just shut down the ETF.
Yeah. Okay. Well, that's fun. Now we're starting to see some things where Charles Schwab is even telling customers with securities that they need to chill out maybe just a little bit. They alerted advisors earlier in June that it was tightening margin requirements and would issue margin calls to investors that exceed the new thresholds. I had some trouble finding what those thresholds were and how different they were from the ones before. But it looks like Schwab is starting to wag its finger a little bit. And the other thing that I want to point out here is one of the often forgotten tools that the Federal Reserve has is margin requirements. They can say this is what the margin requirements are, and it's often forgotten versus like setting the discount rate in open market operations. But the Fed does have the ability to step in here a little bit. I haven't seen much action on that end either.
Well, you also have to consider what the incentive would be. So for a administration that is led by a president who marks the success of his presidency by how well the stock market is doing on any given day.
He rang the bell this morning.
And one of the things that is helping to make the stock market continue to go up and to the right, like we're discussing, is margin. It's the ability to borrow to double and triple down on my quote unquote best ideas. And so if I were to take that away, I'm basically taking away the alcohol at the party, right? The thing that makes everybody so loose and it drops their inhibitions, and now we're having a really good time and we're dancing and feeling good about life. It's the bar over in the corner of this nightclub. If I take that away, if I shut down the bar, well, the party's not that fun anymore. And so basically we're asking the Fed to do the equivalent of that. Why would they, if the administration is marking how well their policies are going or how well their presidency is going by how well the stock market is doing? And so that's going to be the last thing I would expect to see the Fed decide to step in and actually become paternalistic about.
However, that's literally the Fed's job, which is to take away the punch bowl at the party before it's too late and everyone gets in their cars and starts driving Gatsby style out of the party. I take your point, though. Your point is well taken.
This episode is sponsored by Capital Area Planning Group. Capital Area Planning Group is a fiduciary wealth management firm that specializes in helping high net worth individuals and families navigate the complexities that come along with managing concentrated stock options, multiple income streams, and an ever-changing tax code. While our team of certified financial planners are well-versed in all things personal finance, our areas of expertise include equity compensation, estate planning, and multi-year tax planning. At Capital Area Planning Group, we believe in pricing transparency. That's why our fees are posted on our website, right alongside the various services we perform on behalf of our clients throughout the year. If you're tired of receiving the same cookie-cutter advice from your financial advisor, then don't wait. Reach out to us today at capgllc.com to experience a better approach to wealth management. Again, that web address is www.capgllc.com.
Let's get into this story. It's hard to see my parents living so lavishly while we're struggling. Figured you would be interested in this because this is about the great wealth transfer, when it's happening, when it's not, the legacy people leave versus just like, hey, I'm going to wait until I die and then you can have everything, versus helping your kids when they're building a family and need to buy a house. And I think this story was so resonant with people because it was so personal, and in many cases, people could relate to what they're seeing. But it has been a theme on our show. One of the stories that I thought was interesting, 2 years ago, Joe asked his dad for a loan. He wanted to start a lawn care business and needed capital for commercial grade equipment. He needed $15,000. He presented his dad with the business plan, a schedule to pay it back, and still the dad said no. He told me I needed to do it on his own like he had. And the part of this that I find so interesting is that Joe, the kid, still hasn't started the business. And I think there are parts within these stories where multiple things are true. Yes, parents can be jerks when it comes to helping their kids, even when it's a loan, but also, come on, man, you can go to a credit union. There are small business loans out there for a $15,000 lawn care business startup.
First of all, I thought it was ironic that you and I arrived at this story together. Like, you sent it to me like, hey, would you come look at this? And I had read it and added it to my newsletter for the week and was preparing to send it to you like, hey, would you look at this? So I think it does say there's something there. But that specific story you're talking about, I think is indicative potentially of a couple of things. Obviously, we only know the glossy version that Joe told to the news outlet. And so, there's some details that may be missing. But I thought it was ironic that the dad is saying, hey, you need to do it yourself and pull yourself up by your bootstraps like I did. We don't know what were actually the bootstraps he pulled on to get started himself, right? Sure. We don't know whether his dad actually said, hey, son, here's 15 grand, go start that business. And he just seems to have selective amnesia, because we do see that quite a bit where parents are saying, I had to do it the hard way. And then you find out your grandfather gave him 100 grand and that was what started this whole thing. Or you're the president of the United States saying, my dad only gave me a small loan of $1 million to get started, and that's how I got my start. So I built it myself. I'm self-made. Yeah. So, selective amnesia plays a part here. But I take your point, like $15,000 for startup expenses doesn't sound like enough of a hurdle to keep you from actually going and doing the thing that you say you really want to do. You could even, dare I say it, fire up this thing with a 0 interest credit card and get going and start to build traction fast enough that you pay it off before the interest really starts to accrue on you. And that's your origin story, if you really want to do this thing badly enough. But I think the truth lies somewhere in the middle. Like there's probably a level of entitlement here where you expect to be given something based on what exists in your parents' bank account. And there may even be some behavior that led him to expect that he was going to be given a small loan to get started going based on the way he was brought up. Like there's a lot of details here, but I do think it's a little bit ridiculous that in this case and some of the others that you and I both pulled out of here as, I think it's ironic that he's not willing to even make him a loan of $15,000 to start this business to see like if he can actually get it done.
And there also may be reasons that dad is not doing this that he would not want to express on the record. Yes. To your point, there's always things we don't know. However, I thought this stat was interesting for your the Inheritocracy discussion we've had. Mm-hmm. This is according to AARP survey data. 75% of parents are financially supporting at least one adult child, age 18 and up, even though more than half of them are capable of meeting their basic needs with money left over. And the median amount of that money is about $1,400 per year. And this part was a little bit more surprising, which is that only 8% of, I believe, parents and children feel that financial support has negatively affected their relationship. And that's one of the concerns you often hear, which is if I give my kid a handout, that's just going to breed resentment. And at least according to this survey, that's not necessarily true most of the time.
I'm most curious about that 53%. Like 53% of them say that they could do it on their own, but they take the check anyway. Just doesn't seem realistic to me. Like it doesn't feel honest to me. I think somebody's lying here. Either the parents being surveyed believe their kids are in better financial footing than they actually are on, or they think themselves that they're being more benevolent than they actually are, or the kids are lying on the other side saying that they have it together better than they actually do. And they're like, oh, I don't really need the money. I just take the money because my mom and dad want to be so generous. Somebody in this equation is lying once again.
Or you never know how these things are defined. Did the parents pay for plane tickets to go see them? Or did what are the parents paying for as a part of this $1,400 per year? I think things can get pretty tricky here. And this is why in some cases, case studies are better than overall statistics, which is exactly what you're saying.
I always assume, though, that it's housing costs. I assume that it's either paying their rent or their mortgage or providing assistance with a down payment so that they can get into a better house than they would be able to buy with their own money.
This is the anecdote that got me some juice on TikTok. So we got to do this one on the show in a longer form way now that you can have your attention held for more than 30 seconds. Chloe, age 35, she works in book marketing in New York. Her mom and dad, both entrepreneurs, didn't have much money for most of their childhood. And when she went to college, the parents, signed her up for $80,000 in public and private student loans. After graduation, they told her she was fully responsible for them, a surprise to her, including the dollar amount. And since then, her parents' businesses have taken off. Chloe asked the journalist, why did you buy a yacht instead of helping your kids pay off their student loans that you signed them up for? And this is an issue throughout the family where the parents surprised the kids at graduation. These loans are now completely on you. All of the kids seem to be struggling, drowning in this debt. The parents are living pretty lavishly. And my my story brain looks at this and says, wait a second. You couldn't take out $80,000 worth of just public loans. Mm-hmm. Some of those loans had to be co-signed by the parents. So this is a situation where mom and dad says, we're absolutely we're off the hook. We're not a part of this anymore. We're going to yell at you and scold you if you bring it up. This is not something we talk about in our family. However, Chloe, anonymous Chloe in this story, kind of has a nuclear weapon because there's $50,000-ish worth of loans at the time of graduation that she has a cosigner for. Mm-hmm. Because for context, federal student loans, kid can just take out. For the private student loans that mom and dad signed up for, those likely needed a cosigner. And in my view, if they're signing her up for the loan, parents are probably cosigners on more than half of the loans there.
You're talking parent plus loans.
No, I'm not. Private loans.
Okay.
Parent plus loans means it's only on the parent.
Got it. I thought still with parent plus loans, there was ramification for the kids, but
maybe
either way, like I take your point. She could just say, hell no, we won't go. Stop paying on it. And now the parents are screwed. Here's the thing I'm curious about. This is, once again, 3 sides to every story.
Sure.
The kids see the parents living lavishly, but does that mean that the parents can actually afford the lifestyle that they see them living? The yacht that they're referring to could be purchased on margin and be the thing that's the crown jewel for the parents. Like, hey, look at how well we're doing, friends who have been watching us struggle for the last 30 years. And now it's time to flex and let you know that things are great over here. When in reality, maybe the parents just finally did well enough to get access to more credit so that they could inflate their lifestyle to look like the success that they've been wanting to be for a while. And once the parents are no longer here, the kids are going to find out that there was this mountain of debt that they were actually trapped under all along. And that's the reason that they couldn't help them, even if they wanted to help them in the way that,
You're really twisted some logic there, Malcolm. I mean, I think what you're communicating is that a credit score is really important for both the parent and the child.
Yeah, I was thinking that as I was saying it to your nuclear option, they would really screw them if the kids were like, we're just not going to pay our student loans. And now let's see if you can go get the next boat.
And so the thing that's so nefarious about this is it's not that the kid took out the student loans. It's that the parents surprised them by saying, this is the amount of the loans and what you're responsible for. It was that lack of communication, which in my view makes this story pretty nefarious if it's true.
Now that part, I don't find that surprising. I think there's a lot of parents that have not properly communicated to their children at the time they were going off to college how much and who's responsible. I saw that when I was in college with friends of mine who found out as they were in school just how little support there actually was, or how much of a safety net there really wasn't, and then also how big the check was going to be once they got out of there.
So here's my question for you, Mr. CFP. Chloe is the client. The parents are not the client. Parents refuse to talk about these loans under any circumstances. Chloe is struggling. Is there a case where you communicate with the lender, hey, just as a heads up, I'm going to miss my payment this month? Because you don't want to talk to me, but maybe the creditors, and parents don't want to talk to the kid, but the creditors might have a phone call for them.
That's not the way I would communicate that as a licensed professional who has a certifying body to look over my shoulder and attest on an annual basis that I gave good advice as best as I possibly could. What I might say to that client, though, is we've got to prioritize where every single dollar that comes into your household goes. We've got this list of 12 obligations, and we're going to place that particular one at the bottom of that 12. So nice. 12 out of 12 is going to be those student loans that you didn't sign yourself up for and you personally are not the guarantor for. And if there is some money left over by the time we get to the end of this list, that's the 12th priority that gets paid. Above all of these, though, is going to be you paying yourself first. Like that put money aside, pay yourself first bucket gets filled first, even if number 12 is still there blinking red saying, hey, what about me?
I would also choose to just educate them on their priorities. This is what you got going on. This is where these are the things you need to do to survive. It is appealing. The other one does sound kind of appealing. Anything else on this story? I know you were looking through that a lot. Anything else on this story you wanted to talk about or mention? Because I got a rant coming up.
So there was one example too. I mentioned like a lot of times you see this in the home buying process, or you see this in the rent process. The fact that there was a person in there who was able to save up enough for 15% down payment on a home And obviously the 80-20 split that gets you into a conventional loan versus a non-conventional, and it makes a meaningful difference in your interest rate. And when interest rates are 7% or so, it really makes a difference what interest rate you get. And so that extra 5% that gets you a conventional loan is really meaningful, not only, today, like the amount you pay on a monthly basis, but the lifetime of the loan if you were to stay in the house for 30 years and actually pay that full amount that they show you on your closing document. Like, you're going to pay $1 million in interest for this $500,000 house if you stay here for 30 years. But in this case, this person just needed the extra 5% from their parents to make the difference. And the parents were like, what you got is what you got. And that's another one of those cases where if the parents actually have it like you think they do, them being willing to step in and make you a loan that is required to be paid back would have been a meaningful shift in how this house impacts your life and everything else that's going to go along with it, right? So let's say the house is $500,000. I need to come up with, at that point, $100,000 to put down to go and buy this house. Now, I actually managed to come up with 80. So the extra 20, if my parents could kick it in, is going to save me hundreds of thousands of dollars probably by the end of the lifetime of this loan. But also in my monthly payment, that 20 grand is going to make a meaningful difference in my budget. And then those will probably be the same parents who are yelling at you either over text or in real life at Thanksgiving, give me some grandbabies. I'm ready for my grandchildren. You're like, well, how in the hell am I going to afford childcare when I got this mortgage that you didn't want to help me get into? And then the parents are like, yeah, but we want our grandchildren. We're getting old. And there's this now disconnect once again between the olds and the youngs.
Let me do my America 250th topic.
Okay.
It's a little bit of a rant coming in because I realized week of July 4th, we didn't do a celebrating America's 250th topic. And also there was a part of me which was, what can I say about this that hasn't already been said, and also not just totally dark?
You think we weren't adequately patriotic is what you're saying.
I want to be patriotic. I do love America, and that's why a lot of things hurt me so desperately. And so I've been reading this book by Jonathan Levy. It's called Ages of American Capitalism, and it's just a lens of the building of America through capitalism. And I think it's an interesting way to do it because it is fundamental to the founding and building of the United States. And part of the book is about joint stock corporations. And the way we think about that today just means that a joint stock corporation means limited liability, which was fundamental to the building of America, which is that you're not just personally responsible for everything going on in a business. You can have that shield of limited liability. And also part of this was that the idea of a corporation was a sense of personal freedom, because in European times, you really needed the state in order to start a corporation. And as that developed from just the state is controlling everything with some wealthy individuals to Facebook, there was a period of time where you had the state and private investors in combination to start new ideas. When America was settled and throughout European time, these were the East India Company and the Virginia Company, the dominant forces of the world that were trading spices throughout Asia, settling America. And these were very controlling companies and very dark, right? Like these were companies that were brutal. They funded wars, they funded slavery, they exterminated native people. And this was kind of the model of the modern day corporation in many ways, which is that you had the British Crown as a shareholder and private investors. They traded shares in the company. They paid dividends. And in one case, the Dutch East India Company paid out spices as its first dividend because it did not have the cash on hand. Then America starts getting settled, and they still have this idea of what can we do with the state in combination with private investors? Alexander Hamilton comes along and he proposes the Bank of the United States. It would be managed by private businessmen, but it would include this strong government investment of about 20% of the company. And this was a problem at the time because the populace wanted to tell creditors to go stuff themselves, but Hamilton understood that you needed a strong sort of institution that paid back its creditors because you need international people to loan money to the United States. And so the Bank of the United States opens up on July 4th in 1791, 80% private, 20% public. And people are excited about this because, hey, we have a bank that is going to have a monopoly on the federal government's banking business. It's going to be able to control the country's money and credit supply, and shares sold out within an hour. And given what we were talking about at the start of the show, Malcolm, with these triple leveraged options, we see this come into play with this joint stock corporation, which is that these speculators, they couldn't buy stock, but they could buy scrip, which was the right to buy the stock at a future date. James Madison, Thomas Jefferson, they're pissed about this. Madison complains to Jefferson, quote, "Stock jobbing drowns every other subject. The coffee house is an eternal buzz with the gamblers. They're not happy about this." And at the same time, you have these states chartering joint stock corporations. And these companies have a dual mandate. They're supposed to do two things. They're supposed to make a profit, but they also serve the public good. Maybe these ideas won't just be the most profitable thing to start out. And you have maritime insurance, you have canals, turnpike corporations, things that people want. And in the case of turnpikes, you would have rural investors, ordinary people investing into these corporations, not just because they want to see a 10% return in the next day or the next year, but they're like, oh, this is a company that's providing something that I want to see, that maybe I'll even benefit from because I'm going to have more market access as a farmer because you have this turnpike corporation building roads. And now we bring this to today. I'm going to fast forward a few hundred years. We have joint stock corporations today in that government sense. You can pick any company in China. The US government now holds a 10% equity stake in Intel. You can throw a dart anywhere on President Trump's financial disclosure list. I believe he was trading a stock once every 7 minutes. But my idea that I am bringing this to is that you have the Democratic Socialists that say, we want to do, we are going to promise you universal childcare, housing protection, and healthcare for all. And the question is, how do you pay for all this, right? Like with a limited tax system. And I think that creating some of these new projects, which have a dual mandate of public good and making a profit with financial transparency, could be a way of doing that. I will end my rant there.
So we still have these, you're talking about a little bit more of an extreme case when you say we have these joint stock corporations. Sure. Like Intel, as an example, the US getting its golden share for investing and basically saving Intel from bankruptcy. Or even OpenAI publicly floating the idea of what if we just gift the US government 5% of our companies so they'll get off our backs. That's absurd. And I was surprised to even hear such a un-American thing, frankly. But separately from that, the way that we've turned it so that it doesn't feel so much like the government is involved, even though they obviously are, is through government contracts and government contracting. Like Lockheed Martin wouldn't exist as a company if it didn't do business for and on behalf of the US government. I don't know the exact percentage of their revenue split, but Microsoft as a company makes a ton of its business doing work with and for the US government. There's like Palantir wouldn't exist if it wasn't for the Defense Department specifically. Tesla wouldn't exist if the US government didn't step in and make it a zero interest loan of like $500 million once upon a time to keep it from going under, because the US government really thought that the battery technology that they were working to build and the idea of shifting us to EVs rather than internal combustion engines was someday going to have a public good, right? So all of these things really do exist in a way. The biggest problem is the people at the heads of the companies that benefit the most are also the loudest, most vocal people shouting down the idea of welfare and government support and government systems and programs and things that do the public good, that you have the Mamdanis and others on the other side yelling, we need help from the government because you're leaving so many of your citizens behind. And the support that they're asking for is basically the same as the support that the corporations that I'm talking about get from the government, just in a different fashion. And so there's this huge disconnect because two people are standing to the left and the right of a painting, having two completely different vantage points, get them to two completely different perspectives of the same one thing.
Yeah, I believe, what was it? Sun Microsystems was, the reason the chip business started in the United States is because you had the US government as an early customer.
The National Science Foundation that was taken seriously and directly funded through the Clinton administration is the reason we have the internet. So you had a government funded program that its sole job was actually to go out there and sign people up for email addresses and sell domain names. Like, the government wanted this thing for public good, and Al Gore was even tasked to be the guy whose only job it was to make people take the internet seriously. It's the reason people try and sometimes give him credit for inventing, quote unquote, the internet. But realistically, like, he was just the guy put in charge of it. He was the J.D. Vance of the internet rather than settling the Iran, quote unquote, conflict.
So this is my grand bargain. This is where I think, on the right, we don't want to provide any welfare assistance. And then on the left, the hard left, you're seeing, hey, we want the government to pay more for more things. The right is unwilling to admit, in my view, that the government can be a force for good, especially in commercial enterprise, despite their actions.
Has continues to be a force for good in their own personal lives. Like, let's call a thing a thing.
And on the left, there is an unwillingness to admit that within a lot of these handout welfare programs, there's an intense amount of corruption.
For sure.
And that's why you see a lot of people, the response to pay your fair share. Well, what is my fair share and what am I paying for? Why is there no transparency into this? And I think for some of the three big problems, a joint stock corporation where you have the backing of a federal government and a shareholder, not a controlling shareholder, but something where, I want to build childcare facilities where I can provide not necessarily free childcare, but affordable childcare. Mm-hmm. And we can do that with government. We can, make it a muni bond to build this thing. We can have government support for revenue for the first X amount of years. However, like the loans in the parent discussion we had, there is a point where you have to be on your own. This company has to make a profit. However, there is a dual mandate for the public good. So I have my idea for childcare, affordable housing. Let's just say it's a company, we're going to build affordable housing, but it has to make a profit at some point. It has to eke out a profit. And then my new one is, I think it's a real problem in the United States that a family of four cannot be fed a healthy-ish dinner for $15 to $20. Hey, Maha, you could start a chain of takeout establishments. They serve 1 to 3 options on a given night, but you can feed a family of four a protein, grain, and vegetables for under $20, which does not seem to exist in the United States right now.
I really like that idea. Here's my question to that, and I'm sort of being the straw man for this for a second.
You can. I'm working out this idea not on CNBC.
Yeah, so what I think about is, should I, as a person who can very well afford to pay $15 to $20 per person to take my family to eat a quality meal, be allowed to come and buy a meal for my family at this particular chain that you're referring to?
100%, because the goal is to make it some sort of Costco margin where it does become profitable on its own. And you eating at this establishment will help fund future expansions of this place. Then like it's not a food kitchen. Sorry, go ahead.
The argument would be made then that I should also be eligible today for things like WIC or food stamps or housing assistance, all those different programs that you're talking about that are funded with my taxpayer dollars that I don't qualify for because I make too much money to be considered a person who needs this public benefit that you're referring to.
You're paying for the food though. So you can use food stamps to pay for food, like takeout food. This is still what you're missing is this is still $15 to $20 for everybody.
Right.
It is a service to, and we've talked about this before where it's that gap of you're better off making a family of four is better off making $30,000 a year than $60,000 a year.
Right.
These are programs for that missing middle, right? Where you're still paying for it. However, the infrastructure is subsidized in a way to make it affordable, even though you're still paying for it.
But let's talk housing then again as an example of this.
So you're good on my takeout place.
No. I'm giving you the counter argument to it by using housing as my example, because you didn't like my WIC example. So if I am a person who wants to stay in an apartment that is intended to be affordable housing, there's a limit to how much income I can earn. I have to show pay statements, prior year tax returns, all that kind of stuff to be allowed into the building that is considered to be affordable. Yet it's, again, my taxpayer dollars that are used to subsidize the other side of the builder's cost when they put that building up and then either turned it over to the city or they go ahead and maintain it on a regular basis as the landlord. So again, how come I don't get to use my dollars how I choose to? If I want to live in an affordable housing building or a rent controlled building or whatever you call it, I should be allowed to also purchase the property or rent that property the same way I can walk into your takeout place and pay $15 or $20 to buy a meal if that's where I choose to eat and feed my family.
Thank you, Malcolm, for explaining the dual mandate of a joint stock corporation, which is that the goal of this is to serve a public good and make a profit. So the things that you have described are just public good. We're serving a public good. We need to feed hungry people that can't afford to eat, and people need housing. The goal of this also is to make a profit. So in and of itself, you hope you don't have restrictions on it, except I would say occupancy restrictions. Like if you want this place, you can't sublet it and you can't like rent it out as an Airbnb, but you want these places to be so successful that it encourages the expansion of more.
Yeah, but in all reality, you don't want a person like me who makes 1.5, 2 times, 5 times the income cap, the income limit of a person who's allowed to stay in this building. Otherwise, it defeats the purpose. That's my whole point. Like, I don't know that you can have it the way that you want it, where you've got Costco margins on this thing and anybody can go shop at Costco regardless of what their station is or their financial situation is. It just isn't going to be the same as something as important as housing, because you will always have people like me who choose to just live in a cheap place and crowd out the people it was ultimately intended for if you don't put those kinds of restrictions in place. But then putting those restrictions in place is what pisses off the people that pay the most in taxes in these circumstances and have them elect the candidates that say, not on my watch.
So your fire movement community is moving into these apartment buildings that don't exist.
100. That is the perfect example of what I'm referring to.
Okay. I think that that's a fair criticism, and it's also why I'm working out this idea. If you have thoughts, our email is thistimepod@gmail.com. I think that the goal of this is that I'll meet you in the middle. Some of them for this idea, some of them are rent controlled, some of them are not. Because to your point, the people who are supporting this will want access to it. And ultimately, the goal of this stuff is not just to provide affordable housing. It has to be profitable in some capacity.
Let me say really quickly, though, to put a positive spin on this thing as I've continued to chip away at this grand idea. You've been
kind of negative about my
not because I agree with you that it should exist. It's the how does it exist part that I immediately, as a skeptic, am like,
sure.
How likely are we to come together as a unit to make this thing happen without it falling apart based on some nonsense that shouldn't even be part of the conversation? But what I'm thinking about is what just launched over the weekend are what are being referred to as Trump accounts, because, you know, anything that happens good out there in the world that the government has anything to do with has to bear his name. You don't believe me? Check your passport. But in reality, these like kid accounts that anybody born between 2025 and 2028 initially was supposed to get $1,000 funded into this brokerage account from the U.S. government with the expectation that it would be used for retirement by the time that child gets to retirement age, whatever the government decides that age is by the time we get there. I really like that idea. It's even been tacked onto by some really wealthy people looking for tax deductions that have decided to donate shares of whatever company that they own. Like Michael Dell's the most extreme example of this. There's even conversation that like Elon Musk is going to donate SpaceX shares and on and on and on. And basically that means that the kids who are so fortunate to be born in 2025, 6, 7, or 8 and receive their $1,000 plus now of investment dollars in this account when they make it to them are going to be on substantially better footing than even my kid who was born a few years before this and isn't going to benefit from this. But I think the idea, the concept that, you know, one of the problems that we have right now that create this K-shaped economy is that the haves continue to have. And part of the reason they continue to have is because they get to participate in this fantastic growth engine that is the United States stock system. Like our financial system, the USA is the only place in the world that I know of where you get rewarded for setting millions of dollars on fire in pursuit of billions. Like, and we reward that by investing in those companies once they do have these IPOs, or if you're so fortunate to be part of the 1%, investing in those companies before they ever become public companies and, you know, make their way into the public zeitgeist. And that is in some way what we're proposing to give these kids access to way earlier in their lives than the average person pre-2020, pre-Robinhood ever does. Like a lot of people before COVID happened, if you talk to them and ask them, when did you first get a taste of the stock market? When did you first get into investing? It's in their 20s, it's in their 30s. Some people, it's even in their 40s. And so for these to be people who at 5, 10, 15 years old get exposed to the stock market because you do also get to invest these dollars, that I find to be a very fascinating experiment that is worth doing and probably worth continuing into later generations instead of capping it at 2028 like it is at the moment.
Malcolm is at Malcolm on Money. You can find him on social media platforms, which he disdains. He does not like them, but it's a good place to follow his work. Let me do LinkedIn. You can find me on LinkedIn. I post about the show on there sometimes, and also different things I'm writing about and participating in. Well, I'll plug LinkedIn for that, and then you can talk to us at thistimepod@gmail.com. All right, we'll see you next week.
Information shared in this recording and by its guests represent the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.